Good evening, everybody. Blair Nightingale here. It's time for Market Monday, and the most fitting thing we can do on a Market Monday is just look at the market, right? So that's what we're going to do tonight. We're going to do a market check-in every so often here on the program. We don't necessarily go after a specific topic every week. I'm trying to help you, equip you with something that is worthy of your skill set growing in the stock market. We always say that trading is never guessing, gambling, or going for it. If you've been here a while, you've heard me say that. If you've never heard me say that, it's true. Trading is a skill set. It's not something we just guess, throw money at the market. It's a skill set. And because of that, it's something we can learn. And learning is what we aim to do here on Market Monday. I've been saying this lately. It's the goal of a trader to make money, but it's the role of a trader, right? It's the role of a trader to manage the risk. The skill set of trading is learning how to do that. And that's what real trading is about. So even though the goal, we don't get rid of the goal is making money. The role of the trader is to manage risk. And we try to help you understand what that means, because the opportunities in the stock market are enormous. If you're here tonight, it's because you're interested in what you've been doing, you've been trading, or you've heard about the stock market and you would like to learn more about it. That's what we're here to do. And we come from a perspective that money is not the center of life. Money is not our highest power. Money is not everything. We talk about money a lot. We trade. We look at the financial markets. We don't need to be afraid of that, but we come from a biblical perspective in our community here. That is something that we highly, highly value simply as people. We have to look at the skill set of trading for what it is, but it's a community of people who value the Lord and value the Bible. And so that's something that we're bringing to the table. We have programs all week long that are going to focus on that side of who we are. If we're going to be traders, why not blend that in? There's nothing that we do. There is no secular sacred divide. That's something that was designed by the world. That's not something that actually comes from the scripture. There is no secular sacred divide. And I don't actually say this explicitly here on Market Monday enough, that this is just part of who we are in this community. And so many people, everyone is welcome at Tradeway, but so many of the people here in this community at Tradeway are traders. You guys out there online, that's just one of the most important things to us here. And that is something that I want to say off the bat tonight. But we got to dive into the practical skill sets. And of course, that's what we do here on Market Monday. Tonight, we're going to just dive into looking at the market. Sharing the screen with me tonight is our trading platform, Charts by Tradeway. We're going to dive into that in a second. Benjamin's already lighting up the comments, letting you guys know you can always ask me a question. You can say hello. You can tell me whatever you want to tell me right there in the comment box. Benjamin's saying, let's go. Let's go. And so we're ready to go. I want to show you a couple things. When we check in on the markets, we're going to look at two things tonight. Okay, two things tonight. In general, when we say the markets, right, what do we mean? Well, we can mean the indexes, right? The indexes, which give us a snapshot of the markets in one screen. Okay, when we talk about the markets, a lot of time that's what we mean. But obviously, the markets as a whole include thousands and thousands of companies and products that are publicly traded that you and I, with a brokerage account, very simple, a bank account in which we can buy and sell stocks. We go out and we can trade. We can buy. We can sell. We want to buy low, sell high. And that's what our system teaches, right? Buying low, selling high. That's a very basic principle, right? But what to buy low and sell high? When? How? How do we manage risk? There's a whole system to this. It is not throwing darts at the market and hoping that we make some money. Without a skill set, you and I can buy a stock and we can make money, but we won't necessarily know why we did. And if we don't know why we won or lost, then how do we repeat that in the future, right? How do we have an overall consistency where maybe I take 10 trades, I may even lose half of them, but in the end, I can come out ahead. How on earth does that work, right? That's the skill set of trading. It's actually really, really fun, really fascinating, and that's what we do here. So tonight, hey, let's take a look at the markets. I want to show you a few things. Endel is saying, good evening, Blair, and everyone here. Benjamin, like I said, lighten it up. If you're with us tonight, I know some of you, in fact, many of you will be watching this by a recording, okay? Whenever you're watching this, I'm glad to have you guys on here. But of course, when you're on live, you get to comment, get to ask those questions, get access to that information, which is a huge benefit. That's what we try to provide for you guys on here on Market Monday. Endel's saying, throwing darts is fun, but not when it comes to the market. Actually, my father used to play darts quite a bit, quite good at it. I get it. It's fun for some of us anyway, for some of us, but we don't want to trade that way, right? We don't want to trade that way. That's not how we do it. That's not how we do it here. Never guessing gambling or just going for it, right? We don't want to do that with our money. We don't want to risk our money like that. So that said, let's move on into the charts. If I go over to this part of my system here, we can look at what's going on. I want to start out right here when I mention the markets. Now, a couple things I want to talk about here. I'm just going to kind of go rapid fire through some things that we're noticing here in the markets. First of all, and I know a lot of you maybe have heard this part already, but I'm going to keep coming back to this, not because we need to go backwards, but because you have to understand, if you've never looked at a stock chart, or you have looked at it many times, but sometimes we forget the foundation, it's good to go back to the foundation of any skill set. Doesn't matter what we're doing, right? We have to remember the foundation, and the foundation is prices, which is represented on this chart, is a representation of buying and selling. It's human behavior. Yes, there are algorithms and there are high frequency computers and traders, but even that is programmed by people, right? So we see these patterns play out in the market over and over again. And I know this because no matter what anybody tells me, I'm looking at those patterns right now. Let me put this line on here, okay? I put that on there like that. And then I put this one, I'm just going to get a parallel line here, right? Drop that in. And I'm going to put, oops. Okay, let me delete that one there. You've got what? A floor here. Support, right? We've got an uptrending pattern. What does it do? Peaks and valleys. Up, down, up, down, up, down. It breaks. It breaks. And then what does it do? It forms another pattern. It's the same pattern, just going the other way. And then what do we start to see? Another pattern, a wedge. Lower highs, but what's happening on the bottom? The same. 1, 2, 3. And then it changes directions, right? It's using the same level consistently. Now, for some of you guys, I know you've been trading. You're in our program. But listen, I meet literally hundreds of people every week who don't understand the skill set of trading. Hundreds of people. And they think, A, I need a ton of money to trade. Not true. Not true. 2, I need crazy math and technical skills to be able to do anything in the stock market. Also not true. Also not true. Because these patterns create, as I've heard it recently, if I say something like square, square, circle, square, square, circle, square, square, what am I establishing verbally for us? I'm establishing a pattern. Now, we don't know yet what the next one is, but we know what it's been. It's circle. The markets work the same way. That's what a pattern is. They repeat, they repeat, they repeat. And the longer I do this, the more I see how much repetition is in the market. Now, let me just show you. Let's think about that for a second. If there really is, honestly, repetition in the markets over and over again, we just have to be trained to see it, then we can understand that stock trading is never about knowing the future. Right? It's never about knowing the future. It's about knowing the patterns. You say, Blair, is that it? There's nothing else to it? No, there's some things we'll add on to that for sure. For sure. I've talked recently on this program about options. We've talked a lot about options. Options are so cool. There's so many amazing things that you can do with options. I'm convinced that there are still things to discover with options trading that people aren't even doing yet, right? We haven't exhausted it yet. But patterns is the foundation. There are patterns on this screen. Today's market was a pattern. It fulfilled a pattern that we here at Tradeway talk about all the time. And I'm going to show you that pattern today, right? And the more patterns we learn, the more we can recognize square, square, circle. Blair, is it guaranteed to do the pattern? What if it's square, square, triangle this time, right? Is that possible? Maybe we thought the stock was going to go up and it ends up going down. Of course it's possible. Patterns change. Patterns change. But they don't always change every time. They don't happen one time and then change, because that wouldn't actually be a pattern, right? Patterns continue for a while. We can take advantage of them and then they change. And then once a new one is established, we take advantage of it and then it changes. So I want to say to people out there tonight to remind our veterans and invite our newbies. If you can start to identify, it's just visual. It's a visual skill, right? It's not a highly intellectual skill. It's not a highly mathematical skill, right? Can we add some of those things in there? Sure, we can. But the foundation is finding those patterns. And then we learn to exploit them safely, financially safely. I think that should be encouraging to us, because it demystifies a lot of Wall Street, right? It demystifies a lot of Wall Street. Does it take some time to learn? Sure, it does. Does it take some practice? Sure, it does, right? We teach our students how to practice virtually, not even using real money. We can practice, right? We learn the skill sets. We practice before we use real money. We walk before we run. And that makes this whole thing a whole lot more accessible. And that's good, because there's a ton of opportunity here. There's a ton of opportunity for you to learn a skill set that has a huge potential to change your financial future, right? That's my goal. That's my hope for you, for myself, and for those in the Tradeway community. So I want to show you some of that today, and then just show you some other stocks. Remember, I said we'll look at those markets, but we're also going to look at some individual stocks. But I'll check back from time to time just to make sure that I'm not missing anybody in the comments there. So if you have any questions, please go ahead, drop that in there. So what did we have? Well, I said pattern, uptrend. It keeps using the same floor. Now I could go further back even, and you'd see this uptrend continuing much further back. And it stayed in that uptrend for quite a long time, right? We started to get some volatility. What happened here? It hits the floor, it bounces up, and then it fails and it drops through the floor. We had this lower peak, right? The peaks kept getting higher, right? This was a little suspect. And then it broke through, and then it made a low, and it came up and it made a pattern right here, right? Some of you guys know what this is. There's a pattern right there. And then it formed a downtrend. And then we saw this floor here. This is what we call a wedge. And then it popped up, right? Now, the market has been moving like crazy. Some of you guys may have heard about this, seen this. And the market, look at this, green, 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 red, but barely, almost exactly flat, meaning it didn't go up or down that day. It did throughout the course of the day, but at the end of the day, it was just flat. So not that weak, right? Next day up. We got one day of selling, and the next day, boom, right back up, right back up, right back up, way up. And then we've pulled back to today. This is today right here. This thing pulls out, and we've been telling our students, and I'm going to tell you this right now. As this thing has broken out of the downtrend, which is this right here, we want to watch for it to break outside the pattern, pull back, take a little bit of rest, give us an opportunity, right, to see that pullback. We don't want to try to chase the rocket ship, right? A rocket ship's flying by, you and I grab, it's like trying to grab onto a train that's going full speed. It's not going to end well, right? We're going to get knocked over at best, okay? So we want to wait for it to slow down a little bit. Give us an opportunity to jump on board, and then we'll try to grab on. And some of these days that pulled back gave us that, right? And then it just took off, okay? What did it do here, though? Pulled back, right? This was really high up. It broke this level right here, these two tops. It broke through that, right? And then we said, hey, guys, we got to be cautious. Why? Because it's really far and it hasn't taken a break, right? This is like a person who's just been going, and they caffeinate and they caffeinate and they caffeinate, and it keeps them going for a while longer. But then what happens? They have to take a break, right? They have to rest. And that's what happened here. Boom. Nice big candlestick. Big day down, right? Big candlestick. Lots of momentum. But you can't hardly see it. There's one right here, right? That was Friday. And that one's not very big. That was not very big. So the momentum of the selling slowed down. How do I know that? It was a small candlestick, right? Big candlestick. Lots of momentum. Turns into a small one. So wait, the sellers are losing momentum. They're losing momentum. And it's right here on what we call the 10-day moving average. We teach you all about these lines I've got on here, these moving averages, which we use all the time. So look at this. The pattern moves up, pulls back a little, moves up, pulls back a little, moves up, pulls back a little more. Today we get a nice follow through, right? Lots of great positions, trades out there in the markets today. Lots of opportunities in our programs. We were posting all kinds of stuff today. I'm going to show you a couple of stocks that I thought moved really well. We're going to look at one that was newsworthy. It's kind of very interesting to have seen out there. I want to show you that. And a lot of them look similar to this. Remember, this is an index, right? This is something that represents the activity of a collection of 500 stocks, right? It's put together to give us a quick snapshot of 11 sectors of the economy, so we don't have to go and look at them all, right? I don't have to go look at 500 different charts and think in my mind, what are all these charts? Are more up than down? What are they doing? This represents that all for me in one chart, right? That's one of the indexes. Another one of the indexes here is the Nasdaq. And it did the same thing, a little bit similar, right? A little bit different, I should say, but very similar, right? It pulled up. We got that move back down. What was this? Slowing momentum. The slowing momentum was to the downside. If you and I are buyers, this is a good thing, right? We're seeing that slowing at a support level, which is like a floor, right? Bounce the ball off the floor. It hits the floor, comes back up. So if we have a floor, we can expect stocks to come back up. It hits this floor right here and then moves back up today. Now we're into some resistance now on the Nasdaq here. This is the tech stock, but this was a really solid move. The market on the S&P was actually down initially in the morning, right? It was looking like, oh, it might just actually struggle a little bit today. But I jumped on over to the Nasdaq, and the Nasdaq just looked great today, right? It looked like it had a nice strong open. It gapped at the open. There was no resistance overhead. The buyers stepped in right from the opening bell this morning, started driving the price higher. That gave me a lot more confidence for the movement in the S&P 500. And so that was something that I could anticipate this morning because they tend, even though they don't have to move in tandem, they do not. Tech tends to have a pretty strong influence on the market overall, certainly the S&P, when it moves strongly, right? Because a lot of the stocks in the S&P that are heavily weighted in the index are tech, right? And so it really lifted the market tone today. This one gapping above the 100-day. See what used to be a floor over here became a ceiling right here. Well, boom, we bursted through it, and today we opened on top. What used to be a ceiling today was a floor, right? It was a floor. So we got a nice move up. So let's go ahead and look at a couple of these. You know, we call this, by the way, a flag pattern. It moves up, right? It moves diagonal back into support, and boom, it comes up again. What we want to see is probably a move at least back into that previous high, right? That's what we would look for. And you can go out here and you go, okay, well, if this is a representation of stocks in the market, then I should see that somewhere else in the market, shouldn't I? You should. And we do. We do. Look at this beautiful, beautiful flag pattern. Moves up, chopped sideways for a bit, came up, moved right into there, right? Small, bigger, even bigger still. What does that mean? Growing momentum to the downside. Don't try to catch a falling knife, right? That's what the old timer traders used to say. Don't try to catch the falling knife. What happens when we fumble around and try to catch the falling knife? You cut yourself. Let it hit the floor. Don't even worry. Put your hands up, take a step back. Let it hit the floor. Once you know there's a floor in play, then we can pick up that knife, right? In this case, then we might look to enter into some stock trades. So then we see this. It's not green. Not a lot of buyers yet, but the sellers are losing control. How do I know that? Slowed momentum. Small, medium, large, back to small. Doesn't guarantee that it'll move up, but it certainly piques my interest. It's at the floor. And then bam, today, nice big move up. I have looked at so many charts, so many patterns. That repetition has helped me recognize patterns right away. So on Monday night, Tuesday night, Wednesday night, Thursday night, right? Sunday night, I can go into my watch list, look for patterns, and I know how to go from there and set up trades. By the way, in our TradeWay program on Monday night, we have a webinar called the Study Groups. Stock trading, options trading, credit spreads, debit spreads, advanced option strategies. We do a webinar for each of them, and we actually find setups just like this, right? We find them with you. Coaches, students come together, and we find these setups, and these become trades that we follow throughout the week, right? So we have opportunities for you to come in and learn by experience, okay? This is in our TradeWay programs. Head on over to tradeway.com. If you've never taken a course with us, you can learn our foundational stock trading course right there, tradeway.com. We have a live step 1 coming up. It's all on the schedule right there at tradeway.com. You can sign up for what you can learn in this event, right? It's less than $100. Less than $100 for the best financial education that you can start with on stock trading, right? $99? No brainer. No brainer. That's a great place to start. So that is where you'd want to go for that. Let me check the comments here, make sure. Caffeine crash. Benjamin's got a question there, and I'm going to come back to that, Benjamin. I like that question, so I appreciate you putting that in there. But look at that pattern. And today, man, the candle didn't even really pull back, right? The high was the close. It just pushed strong till the end of the day. There was a couple like this. You know, you go through the tech stocks because this is what we saw in the Nasdaq. This one, not as pretty in my opinion, but pretty good, right? It pulls back into the 10-day. Obviously, this average, it's an average. So it gets pulled up, right? It curves as the stock price moves up. So this one actually bouncing right off the 10-day on Friday, right? Nice looking chart, and then getting the follow through above old ceiling, right? Breaks through it, getting a nice move right up to that previous high, right? That could be a great stock trade right there. Could be an even better options trade right there. So these are the exciting opportunities. You know, sometimes the market's in transition, and it's not as easy to find opportunities. Sometimes the greatest tool that a trader has is to not try to force a trade in the markets, right? If we don't have a lot of tools, you have to fit the tool for the different jobs in the market. You know, the old saying is if all you have is a hammer, everything looks like a nail, right? Well, at TradeWay, we don't do that. We equip you with the tools you need to do the whole job, which is trade in any market season. Right now, though, today what we're looking at, much clearer opportunities out there, right? Pretty clear, obvious opportunities, but not so obvious if you're not trained to see them. Who can blame us, right? If we're not trained to see them, then it just feels like I have to guess, I have to gamble, I have to go for it. If that's you, we want to just kick that out of there. We want to help you so you don't have to do that, right? That's just anxious. We just lose money. That's not what we want to do. So getting away from that, I see your thank you there, Benjamin. We'll get to that for sure. Great question from him. Right, moving through some of these. Look at this. All right, I'm going to get rid of these lines. Here's a popular stock. Now you'll notice I'm looking at tech stocks. It's not all tech stocks out there, right? But this was so clear. Boom, Apple just on this crazy run, right? There's the train going at full speed. And in this case, if you had just tried to grab on, well, the truth is it did keep going, but you never know, right? You never know when that guy's just going to pull back, and we don't just want to guess. Well, here we got the rest. We got a nice rest, hits the 10-day, bam, follow through, right? Looks very similar. Great move on Apple right there, okay? So that also, I'm going to show you one more, and I'm going to dive into Benjamin's question here. Just an interesting one, right? Some of us maybe have never seen this, or we don't quite understand what this is, what this means. Remember that the stock market here in Texas, it opens at 8:30, right? Central Standard Time, and it closes at 3 p.m. That's what we call the trading session, 8:30, I'm sorry, to 3 p.m. So overnight, the market is closed. But that doesn't mean that traders on Wall Street, retail traders like you and I, can't put in orders to buy and sell overnight. Now, there's some things we need to learn about putting them in. We do not typically ever put buy and sell orders in overnight. And the reason is because we don't know what the big boys, the big money out there, are really doing overnight. We want to wait, let them show their hand when the market's actually open. We can see it displayed on the chart, and then we can make our decisions. But the big money out there, they're more than willing to go out and just buy or sell. And when they do that overnight, the market may be flooded with buy orders, right? What happens when you go and everybody wants to buy a lot of something, anything, right? The supply becomes more scarce. When the supply becomes more scarce, then it becomes more expensive. If there's a lot of something, right? It's everywhere. It's so easy to get. It's not going to be that expensive, most likely, right? It's not going to be that expensive, right? You think about it like a bottled water, right? Bottled water, you can get a case of bottled water pretty inexpensive, you know? It's interesting that in the country where we have access to drinking water as much or more than anywhere else in the world, we buy more bottled water than pretty much anywhere else in the world. So that's an interesting thought, but I digress, right? It's common, so it's not expensive. That's supply and demand. That's how that works. Well, look at what happened on Twitter, right? The demand for Twitter overnight exploded. And thus, when the market makers opened the Twitter market this morning, they raised the price significantly as they filled all of those purchase orders that came in before the market session opened this morning for you and I. Why did that happen? Because the richest man in the world, Mr. Elon Musk, went out and bought a 9.2% stake in Twitter. That's massive. That is a massive, massive news article, but also a massive purchase, right? It caused a huge stir in Twitter, and people went out and said, whoa, this could be huge for the company. I want to buy some of that stock. And that's what they did. And you can see it's a green candlestick. It gapped way up today, but it didn't even really sell off, right? Sometimes these gap up and then it sells off. It's up 27% as of the close today, right? It closed last trading session, right? Friday, it closed below $40. It's now almost at 50, right? That's like a 25% increase. That's pretty huge. So that, and look at this volume. This is the volume of the shares traded. Look at it all the way along here. You know, this one was pretty big. This was pretty big, right? This one was pretty big too. That was right around earnings, which tends to be higher volume. Look at that. No, that's nothing compared to this, right? Huge news item, right? Huge news item. We actually were talking about Twitter on a webinar last Friday. Of course, we wouldn't have known that Elon Musk was going to do this, but a similar pattern, right? It came down and pulled into that average. We didn't know that was going to happen, but looks very similar. A little more squished on this chart, but very similar to the ones I showed you before. So very, very interesting. We'll see what happens with that. There's some social implications there to be sure. I won't go into that tonight, but also huge for the stock. Doesn't mean it's going to keep going up from here, right? Sometimes these big, exciting, emotional news items give way to some selling where a lot of people made a lot of money and they tend to come in and start to take profits. But we'll see. We'll see. It's going to be a wild session tomorrow, most likely, for Twitter. Now, that said, let's get to Benjamin's question. I invited you guys to ask some questions here on Market Monday. I appreciate you sending this in. Is it wise to have options as part of one's 80% money? So when Benjamin says 80% money, for us here at Tradeway, that's not necessarily to say exactly 80, right? Because there's not one magic number that fits everybody. But what he's referring to is I've got short-term trading capital, right? I'm looking for cash flow. I'm looking to build money. This isn't just 59 and a half. This isn't just retirement age. This is something I want to use to build wealth and have money now, right now. This is short-term trading. On the other side, I've got a bulk of my capital that I'm investing in the long term. I'm buying and holding stocks. It's a different skill set. I'm holding this for the long term. This is for my retirement plan, maybe some other major life financial goals that you're working towards. That's going to be different. Now, in the past, we've referred to that, generally speaking, as the 80%, 20% money, okay? So when we're talking 80%, again, it could vary, but we're talking long-term buy and hold money. Benjamin's saying, is it wise to have options, to use options as a part of one's 80% money? And my answer is yes and no, which is maybe an unsatisfying answer at first, but let me explain what I mean. I say yes and no because it depends on what kind of option strategies are being used. We have to understand that long-term money and short-term money are two different animals financially. Two different animals. We don't manage them the same way. We don't take the same kinds of risks between one or the other. Are we talking about somebody who's 20 years old? Are we talking about somebody who's 55 years old? Two very different seasons of life, right? So depending on your financial goals, you may do something radically different with your long-term money. Now, it's long-term money in either case, 20 or 50 or anything in between, but we still might do some things radically different. Now, do people have the ability and trade options in a retirement account? Sure they do, right? In large part, very safe, very high probability, much lower return strategies like, say, covered calls. Something like covered calls is something that you could do where you may sell a call against some stock you own if you're willing to sell the stock. Remember, if you sell a covered call, you have to be willing to sell the stock, but you'll sell it at the strike price, something we talk all about in our program here at Tradeway. If you don't know what a covered call is, okay, it's in essence, you own a stock. Imagine you owned a house, right? If you owned a rental property. What's one thing that's very popular for investors right now is to take a rental property or even their primary residence, right, and use something like Airbnb, right? Airbnb, like a multi-billion-dollar company that you and I could use, right? Instead of a hotel, you just rent out a room or even your entire house. Maybe when you're gone, maybe you have a rental property, you can rent that house out very easily as though it were a hotel. This is something people do. Well, that creates extra income, right? That you can then potentially put into the equity of the home. Now, I'm not giving this as a financial strategy advice tonight, but many people do that, right? Many people do that. You say, well, what about the stock market, right? Well, if you own a stock, right, there are ways to, in essence, make cash flow on the stock, okay? That's what a covered call is. It's sort of like renting out the stock for a period of time, and you collect a little bit of money on that, right? You say, well, wait, I can own the stock and collect a little bit of extra premium on that stock? Sure you can. Sure you can. That's called a covered call. We teach how to do that. There are risks involved. So we have to understand those risks, okay? We have to understand what that looks like and how we do it. But there is potential there, and people do that in a retirement account, right? Not everybody does that. It doesn't fit everybody, but it is an example of something that we might do in a retirement account. Because generally speaking, Wall Street considers that very, very safe, right? Very, very safe. And there are reasons for that, right? There's no strategy that has no risk. So we have to understand the risks, but that is one that is considered very, very safe, okay, when it comes to options trading. So very, very cool. Very, very cool. A lot of people don't understand. You and I, if we're going to sell a stock, Wall Street can pay us to sell a stock we were already going to sell. You just have to know how to do it. In fact, Wall Street will pay us to buy a stock that we were already going to buy. My neighbor who doesn't have any options training will just go out and pay the market price for a stock, while I know how to go to the market and get paid to buy the stock. Okay. Blair, are you really shooting me straight? Is that how that works? That is how that works, right? I can get paid by the market to purchase a stock, right? It's pretty interesting. Using put options and call options, you can do all kinds of really cool stuff. All right, guys, we're coming on 35 minutes. This has been our Market Monday market check-in. Try to do that. Just dive into the charts. Let's just get right to the meat of this whole thing. Appreciate you guys being on here. Those of you who are joining on recording, thank you for being here. This isn't just 35 minutes. We come on here to just come on here. I want to connect with you. I want to show you some things in the market that are going to help edify and encourage you in your stock trading. If you've never stock traded before, head on over to tradeway.com and you can join our introductory class. In fact, before I forget, I am going to copy into the comments, both Facebook friends and YouTube. We have a free topical webinar. We do these from time to time here at Tradeway. We put on a topical webinar, a specific topic that we want to cover, something we haven't done on Market Monday. So join us for this topical webinar coming up. I think I'm going to do this here. Yes. Oh, this is perfect. Okay. So this topical webinar is timing momentum moves in the market. I like to say this all the time. We don't just need price movement to make money in stocks. We need price momentum. Learn what the difference is. Trading is easier in momentum than it is in movement. Prices are always moving. That doesn't mean it's an opportunity. We need momentum. And in this topical webinar, we're going to teach you how to find momentum. You know what I showed you today in these stocks? Let me share my screen again just for a quick second. What I showed you in these stocks isn't just movement, right? Let's go to Amazon. It's an explosive momentum. That's what this flag pattern is like. So come take a class from us and you'll learn a whole lot more about that. It's completely free. If you really want to dive in and get moving further, faster with less work, like our friend Myron Golden likes to say, step one, start your journey, www.tradeway.com. We'll hook you up, all right? You can't lose taking financial education. As the scripture says, we always like to say this, and I'll close with this: knowledge is better than gold. You can take the gold, but you can't take the knowledge, right? The world wants us to be dependent on all kinds of things, right? They can pay us and we need them. But if we have the knowledge, we can move towards independence. And that's the goal. Appreciate you guys. Thanks so much for being on. We will see you next time. Good night.